It's hot in Texas. It's 106. Index, I think, is like 150. And while it's hot in the weather, it is not hot in real estate. So I'm going to show some slides. This isn't meant to be a Debbie Downer. In fact, you may be able to take these things and share with anybody that's on the fence or hesitant about buying today. I think some of this stuff can be really motivating if the buyer is serious and actually wants to do something. But if they're on the fence, they're not real sure, and they're leaning towards no, this data may not help get them super pumped. So we'll hop into it. As far as the normal structure and process for what we do, we will go into the market update first. And just tell you that before we do that, I want to share the 30 years, or technically this is since 1973. I'll put it over here so you can see it. That graph just shows interest rates, the 30-year mortgage. And you can see that, what was that, 18% back in the early 80s? And you can see the blue line between 6 and 8% is kind of that where they've been. Guys, historically, where we are where we should be. Now, in 2009, if you remember, that was post the mortgage meltdown. That is the crash, and the government stepped in, and they made rates artificially low. So I don't expect rates to go back there anytime soon. Unfortunately, I think it's going to be more of the same as we go forward. But hitting that, let's kind of hop into where rates are. Today, rates are sitting at that 6.7 range, still kind of about the same, down the same. It's been moving sideways. The proof of that is here in the 10-year Treasury. It's sitting at about 4.67. And usually we're in the last handful of years when things are behaving semi-normally, you'll see that the spread between the 10-year and mortgage rates right now is about that 2%. We've seen it as low as 1.5. We saw it as high as 3 during the COVID era. But this, take the 10-year Treasury, add 2 points to it. So 4.6 becomes 6.67. And that's about where we're at. And you can see the little graph here, and I'll make it bigger for everybody. You can see on the right where it's basically since July been moving sideways. We got good days, bad days, good weeks, bad weeks, but ultimately it's just kind of drifting sideways as we move along. So here's something that I think is super important to note. We did get a little improvement yesterday or this week, I should say, with rates, just because Scott Bessent, who runs the Treasury, not the Fed, but the Treasury, what's funny is they issued the debt, and now they just announced they're buying back their own debt. They're creating their own supply, and then they're also creating their own demand. They basically doubled what they were doing. They were buying about $2 billion of mortgage-backed securities. Now they're going to say they're going to buy $4 billion. They say it's going to stop in the near future, but who knows? So whether it stops next month or not, to be determined, but it's worth noting because that does help us a little bit in rates. The Fed, again, not Scott Bessent, but the Fed, the good news is you can see the odds of the hike in September have gone down from 2/3, 67%, a lot of 6/7s today, down to about 25%. There were 3 members that basically they dissented. We covered this a couple weeks back. That want to hike, some don't, some do, but it's kind of this divided Fed. I think nothing's going to happen. So I think it's a lot of do about nothing, but we shall see. September 15th and 16th, that's when the Fed meeting's going to come out. They're going to give us a new dot plot. They're probably going to keep things exactly the same, but what they tell us will be interesting. And you do have 3 different inflation reports that will come before that announcement. So certainly those things can change, but I just don't see that changing a ton. Now, on to the real estate market. I saw this all over. Gary Keller of Keller Williams. He was quoted as saying, the market, isn't funny, but it doesn't lack opportunity, right? So, or isn't fun, I should say. It's not funny either, or fun. So the point is, this one is what I've been sharing with folks all week. The active buyers, it's the lowest it's been in 13 years. We have less than 1 million, 967. Again, ton of 6/7s this week. Ton of 6/7s, but 967,000 buyers, according to the research done, 1.5-ish, right, million listings. So that's literally the sellers outnumber the buyers by 50%. And you can see on the right side, the bad news, Dallas made top 10. We're number 7. We don't have as bad. What's funny is look at numbers 3, 4, 5, and 7. They're all Texas, guys. Florida has 2 there, and 1 out of 7 homes for sale in the United States are in Florida. I thought that was staggering. So in Miami, you got 150%. Nashville, 150. Houston, 130. Meaning you're just, it's a buyer's market. So in Dallas, we're 99%. I'll take it. Look, it's better than being number 1, right? Where the sellers outnumber everybody else. But on average, it's about 50% more sellers than there are buyers. So put that in a graph, and it looks something like this. Not great. So again, this is a 13-year low as far as just looking back, how far back they want to go. But it says some of the articles said ever. That's not the case. We've had population growth and everything else. But as far as like the seasonally adjusted and what the numbers look like, it's not good for the pending home sales for what it is. Now, here's the spin, the positive spin on this, and I'll go big here on the screen. I think especially if you're in the Northeast, right? And I know we're in Texas, I'm in North Texas, but the reality is there are more sellers, which means it is a buyer's market. So if somebody is on the fence, I think now is a great time to do this. The other piece that we didn't highlight there, but I saw in other articles, is the number of sellers is less. So 1.46 million sellers. Before the mortgage meltdown, there were 3 million. There are 3 million buyers, I should say, and then 1 million homes for sale or listing. So at the end of the day, we've had all this population growth, and it's 1.5 million listings. I get it, but there's parts of the country where you can't find a home to buy. Now in Texas, especially like North Texas, like Salina, I know that there's a ton of build jobs just sitting. I know that folks, builders have all this inventory, but it's all very pockets. I know some parts of Dallas, some parts of Fort Worth, it's hard to find a good home in the neighborhood you want. So it's all going to be very localized. Obviously, I'm not telling you anything you don't know, but I think it's worth sharing this information with your potential buyers. A couple things now, switching a little gears, but still concentrating on buyers. And I'll make this where we can see the whole screen, like this, like that. Sorry. So the cash increases I found very interesting in this was, and here's a whole screen so you can read the fine print at the bottom, Dallas and Austin, Houston were all named as being up for the number of cash buyers. So in terms of whether it's investment properties or just people moving in with cash, we were up 2.3% in Dallas. Houston, about 2%, Austin, about 3%. So it's interesting with all the different markets, for the most part, cash buyers are going down. Here in Texas, more cash buyers are going up. I think a lot of that could be just because of where people are coming from. And two, I saw a stat that said a lot of New Yorkers are heading down to Florida. Well, if you sell real estate in New York, you probably have cash to buy in Florida. So maybe it's because people coming in from Texas are coming from California and the other places where it's more costly. Maybe that's why we're increasing in the cash. I don't have facts to back that up. That's just my speculation, but I think it's a good one. Next, here's some good news, team. So good news, bad news, right? If you're trying to buy, I'll put this here. Frisco was literally number one as far as the best real estate markets. So out of Wallet Hub, they did this market research for 300 cities, Frisco, McKinney, and Denton, all in the top 5. And Allen was actually, I think, number 10. So some of the things I would just promote here is these are the best places to buy, according to a lot of research based on schools and all this other stuff. But basically, Dallas was number one just as a whole because we had so much good things. 7th overall in job growth. The interesting part I thought in this article also, apparently almost 50% of the homes built in Frisco are just since 2010. 47 to be technical, but holy smokes. So I think this is a phenomenal stat to share with anybody that's looking to buy in the Metroplex. If you got folks on the fence or they're not sure where to go, buy here instead of wherever else they may go, because this is the place to be. This is some other stats, right? McKinney was number one, annual job growth 17%. That was 6th in the nation. Building permits per capita were in the top 10. So again, they have room to build. So again, I just use these stats to your advantage, share them with your folks that are looking to buy. Switching now to more the investors. We talked cash earlier. I thought this was interesting. Home flipping, the volume's down. We've known that, right? It gets harder to justify some cost for the casual and the in and out kind of lukewarm investor. But for the ones that are serious, apparently, margins are actually doing really well, and they're still making money. And I saw this; it just came out. I don't know why it's quoting Q1 of this year, but 6 months old data. But the reality is, Texas had the most flippers. Kind of makes sense because we're the biggest, one of the biggest states. But the reality is we had the most flippers. So there's still opportunity if somebody's out there looking to invest, whether it's your first time or 100th time, which then selfishly takes me to the product of the week. Foreign nationals, we have a phenomenal foreign national program. So if somebody's coming in from out of the United States and wants to buy, certainly we can help folks that are local, right? If somebody's here and wants to buy, and I personally have owned lots of real estate and still do currently. Happy to walk them through that. But if you do have folks that are out of country, we just did one and it's super, super fantastic product. I'd help those folks out. All right. So now the fun stuff, let's get in there. DFW, we have some expensive homes. You can see, and this is Texas overall. The top one, let's see, I think the top one is in Austin, technically. I think it's 24 million bucks. The next one, it is here in the Metroplex, 15 million and 11 million down here. Also in the Metroplex. That's Fort Worth, actually. I thought that was really pretty if you look at it. But anyway, super expensive homes, right? Well, the most expensive one in the United States ever is listed at 400 million. It's out in LA. You can see this. It's got guest quarters. The stats, and I've seen this house before, but holy smokes, is like even the guest house had like 13 bathrooms. This whole estate is for 400 million. But guess what, guys? $2 billion home. That's right. This house in I think it's Mumbai, 27 stories, 400,000 square feet. I beg your pardon. It has a 50-seat theater. It's got a snow room. Not even sure what that means. I guess it's just always snowing. 168 car garage. I mean, that's like an apartment complex. Let's see. It had 9 elevators, 3 helipads. I mean, come on. How many helicopters do you need flying into this thing? It is incredible. It's a Guinness Book of World Records. It is massive. I had no idea it existed, but there you go. So now, joke of the week, dad joke. I was told by my marketing team they don't want it, but here we are. Why did home buyer break up with their mortgage rate? Too much commitment. They wanted to date the rate, not marry it. That's kind of a refi joke. It's not that great, but it's a dad joke, dad mortgage joke. The other meme of the week was this guy, and we couldn't decide which one. So the captions, I thought the favorite was Frisco Realtors reading the Wallet Hub rankings this week. Like, what? We're number 1? Yeah, we are. Good for us. And then last one, because I thought it was funny, because we've had this with another loan officer this week. When the underwriter asks you, how'd you come up with your qualifying income? I don't know. AI did it. Who knows? Evidence of success, guys. Appreciate, we had some really good folks. This is one of the most recent ones, just saying that we did a great job. We love our Google reviews. And then always, get social with us. Help us out. Forward, share, subscribe, all that fun stuff that goes with doing this. And remember, as always, when you think mortgage, think Mark.